Hello, my name is McCoy Hill, and today I'm going to present on why your company should or should not apply activity-based budgeting as your primary way to budget for your company. First of all, why do we make budgets? Well, as a corporation, we make budgets for the same reason we do personally. We want to maximize our short-term profitability, and ultimately we want to grow in the long term. What is an activity-based budget? Activity-based budgets are formed using activity-based costing methods where fundamental cost drivers are identified and costs are allocated based on a selling activity. So, for example, say that company A sells widgets and they predict that they'll sell 1,000 widgets next year. They also identify that it takes 2 machine hours being the cost driver, for every widget, and it costs them about $10 to be able to run the machine for an hour. Now that's simple math. 10 times 2 times 1,000. It gives us $20,000 to budget for costs in the coming year. However, the way we come to those numbers, the way we identify machine hours, for example, as a cost driver, those are the details that are sometimes difficult with activity-based budgeting. A couple of other forms of budgets to consider are traditional budgeting. This is a form where we take the numbers that we have from prior years and we apply them to the current year. We have rolling budgets, which is where we take certain numbers from a given period, say a month, and they roll over to the identical period in the next year. Then we have zero-based budgeting, which we'll talk a little bit more about in the future, but this is in industries that may be more changing, not so static. And zero-based budgeting is where you zero out the amounts at the beginning of each period and you reforecast what the amount should be for the following period. Some advantages of activity-based budgets. Activity-based budgets focus on overhead activities, which for some companies can make up more than 50% of the total operating costs. Secondly, they specifically identify the factors that are most responsible for costs. So by being able to identify cost drivers, we can make them run more efficiently, which will increase our profitability. They also provide useful information to management about the productivity of a product compared to cost. So if a management team is trying to decide whether or not to continue or discontinue a certain product line, they can look at these cost drivers and determine what the best outcome will be. A couple of disadvantages of activity-based budgets is it's often very difficult and costly to identify the drivers. You may have to hire on new labor to do that. You may have to have new software or other technologies, which sometimes can be very costly. And another thing to think about is in your industry, maybe activity-based budgeting is not detailed enough. An example of this came out of the Journal of Accountancy in 1998. The finance team for the Chicago White Sox was explaining how they make their budget. And they use a technique called zero-based budgeting. Zero-based budgeting really helped them because they ultimately decided that they couldn't predict what their revenue stream would be because the biggest determinant was wins and losses of the team. So the zero-based budget requires the firm to reevaluate predictions every month and put together assumptions and new forecasts for each individual month. In this case, this finance team put books together composed of 1,500 to 2,000 pages of assumption sheets for every account in the general ledger. Now, that also may seem very costly, but if you are willing to pay as much as you need to for an activity-based cost system and it doesn't do what you need it to do, like in this instance, it may be beneficial to look to a different costing system such as zero-based costing. In conclusion, all companies need to run a cost-benefit analysis to see if the financial costs outweigh the benefits, sometimes intangible, that activity-based budgeting produces. And ultimately, proper preparation prevents poor performance. So as a management team, it is important to take the proper time to determine which budgeting style fits your industry and your firm the best. Thank you.